If you're working in Uber, this video is for you. Hi, this is CA Pranay Bafna. I will help you to understand how the Uber salary works. Every month, your salary gets credited to your account, and yet it comes with a little disappointment, right? You expected 3 lakhs, but lands in the bank account is 2.2 or 2.3 lakhs. So, where does the rest go? Let's decode your Uber salary slip line by line. There are mainly three components that an Uberite gets. The first is like the basic pay, the second is RSUs, and the third is an optional thing called ESPP. So the base pay, what does that consist of? It consists of your basic salary, it consists of your HRA, other allowances, meal allowances, internet allowances, Uber credits, and all those things comes into base pay. What is mean by RSU? RSUs is the stock component that is given by the company in lieu of your salary. Again, it is also a taxable thing. The third thing is an ESPP. It is not taxable, but the gain on the ESPP will be taxable. I will explain you all the things in the detail in the coming part of the video. ESPP is an optional thing given by the company to purchase its own share at the discount. It is an optional thing, not a mandatory for employees. Let's understand the actual salary slip of the Uberite. So this is the basic salary slip of an Uberite, okay? So mainly the concern is the deductions part. These are the earnings wala part, okay? This is the earnings that you are getting during the year, okay? And these are the deductions. This minus this is the total earnings that you get in the hand. Okay, so these are your total deductions, these are your total salary, this minus this is your total net pay that you get in hand. Let's understand the first part, that is ESPP TCS deduction. So first of all, what is TCS? If you're remitting money out of India, the government is levying a TCS on that. How does that work? For example, the limit for the last year was 7 lakh rupees. If you're remitting outside India 7 lakh rupees, there is no TCS. And if the amount is 8 lakh rupees, on the remaining 1 lakh rupees, you have to pay 20% as a TCS. Now that limit has increased to 10 lakh rupees. Up to 10 lakh rupees, there is no TCS. Beyond 10 lakh rupees, whatever amount you are remitting, that will be levied at the rate of 20%. So again, what is that ESPP? For ESPP means you are purchasing a company shares from the company itself at a discounted price, for which the company is remitting the part of your salary outside India to purchase its own share at a discount. So again, if you're remitting the money, that is considered as the remittance outside India, and the TCS is getting applicable on the same. Now the second most important concern is RSU pre-tax. What does these actually mean? To understand it, let's like go into deep. So for example, if you're getting 10 shares of the Uber, that is a part of salary, that is the vesting happening every quarterly, monthly, or these semi-annually thing, okay? So for example, if you're getting 10 RSUs, okay, out of which 7 RSUs are getting vested in your Morgan Stanley account, the remaining 3 RSUs are getting sold for recovering the taxes. Company sold the shares and recovered the taxes from that and paid that taxes to the India government. That taxes are not being remitted to the US government. This is the important point. Many people have the misconception कि वहां पे टैक्स पे कर दिया है, अब इंडिया में वापस टैक्स पे करने की जरूरत नहीं है. But again, you don't have to pay tax on this component because it is already being deducted as a part of TDS deduction in your salary. So if you check therein, the 11 lakh rupees is the total tax that has been deducted in your salary, which comprise of two components. First component is from your in hand salary, and second component is this wala component. So this 11 lakh 35,000 comprises of 3.5 as the taxes from the RSUs, and remaining approx 8 lakh rupees is considered as the tax from your in hand salary. So this is the important thing you have to take into consideration. That is why here it is negative. This negation is being the addition in this part. Okay. Now let's understand the ESPP A and B. So these are the two components that is being sent outside India to purchase the share at a discounted price, and this is the discounted price only. So what ESPP actually is? So Uber allows you to invest part of your Indian salary to buy Uber shares at a discounted price. For example, it is usually a 15% cut discount. So if Uber share is trading at $60, you might get it for $51. And that 9% discount is not considered as a gift or the free component that is given by the Uber. It is a taxable part, and which again forms the part in this salary thing, this tax part. Okay, yes, even though it's US share, the discount is considered as a perquisite and is added into the income. Okay, so in my example, the 51 ka share, 60 rupees ka share, you got it at a 51. So 9 rupees is a discount, and on 9 rupees you have to pay taxes at, my bad, $9 you have to pay taxes at 30%. Now, how purchase happens? Your contribution is deducted from your Indian payslip every month. So this was the contribution that was being deducted. But the actual purchase happens once every 6 months. At the time, the Uber calculates the discount based on the lower of the share price at the start or end of the period. So you often get a benefit of a look back discount. That discount value gets added to your Form 16 and taxed as a part of your salary. Again, when you sell these shares, okay, if you're selling these ESPP shares at a later time, it becomes a capital gain event. The purchase price for the tax purpose, this is the most important thing. So again, if you're getting a share, in my example, you got a share at 51, my bad, you got a share at 51, but the FMV, that is the fair market value, as on the purchase date was 60 rupees. So you have already paid the taxes at $9. So to consider, for the purchase price for the tax purpose is the fair market value. For example, if you're sharing this, selling this share at 95, you don't have to pay the capital gain on 51 minus 95 minus 51. You don't have to do that thing. You have to pay tax on 95 minus 60. This is the biggest mistake you guys do while filing the taxes in the case of the ESPP being sold. And again, for the taxation purpose, again, it's a short term, long term. I will prepare a detailed video for that thing. Okay, to in short, to summarize all the things therein. Okay, so this is your Uber salary slips, which is the ESPP taxation deduction. This is in one component. The second component is RSU pre-tax, ESPP B and A. That is the amount being remitted. Okay, in my case, it was $51. So this is the $51. It is not $6 here. Okay, so you have to consider it here as the $51 only. Okay, so if you like this video, please share with your friends and Uber colleagues. Thank you.